Now to Eddie Ghabour, co-owner of Key Advisors Group in Lewis, Delaware, and author of the bestseller, The Common Sense Bull. Eddie's another one of our bulls, and he's frequently on Fox News and Fox Business to share his insights. Now, Eddie, last year, you agreed with me that the Fed would create the next recession, but you said it's not going to be in 2019. The market can still go up in 2019. And you know what? You were right. So tell us, what's in store for 2020?
So in regards to 2020, I really think that the momentum that we have is going to carry on into 2020, at least into the first quarter. We got a lot of momentum. We got the China trade deal, phase one, whether it's a good deal or not is to be argued. The bottom line is that dark cloud is temporarily off the table. And the other thing that's changed drastically for 2020 is the Fed is not going to raise interest rates. Those are the two dark clouds that everybody was worried about in 2019 that are off the table for the first part of 2020. I think this momentum carries in the first part, and then it's going to be all about the election, and where I expect a lot of volatility in the markets in 2020.
So are you saying that, in your opinion, whether the market ends up for the entire year of 2020 or down, in large part depends upon the surveys and whether or not Trump is likely to get reelected at various points throughout the summer and fall?
I think that's going to have the biggest impact in the summer and fall months. And if things fall in place a certain way, I think 2020 might be the last hurrah in regards to the market. And we see a double-digit return again in 2020. And then I think that's when we have to really start to worry about the next market drop. That's my opinion.
100% agree. Last thing, 30 seconds. Tell us, the Fed won't raise rates, but do you think they're going to lower rates again or do any more quantitative easing other than what they're doing now with the short-term T-bills in 2020?
I don't think they're going to do anything on the rate front, but they're doing quantitative easing right now, whether they want to call it that or not.
I know. But do you think they'll continue that beyond March, which was what they've promised?
I do, because I think they've started something that they can't stop, and that's what worries me heading into 2021.
Well, and that's another reason why, assuming Trump looks good in terms of getting reelected, another reason why it's highly likely that the market could continue an upward swing throughout next year. So thanks so much, as usual, Eddie. Great having you on the show.